Our calculation of VAT consists of determining all of the output VAT that a vendor levied during a particular tax period, and then from that subtracting all the input VAT that was claimed on goods and services, and we will then get either an amount payable to SARS or an amount refundable by SARS. The timing of this calculation, in other words, when we account for the VAT payable or VAT refundable, and how it is levied and when it is levied, depends on the vendor's accounting basis. The concept of an accounting basis is found in the VAT Act, and like I mentioned earlier, the reason why we need to know what the accounting basis is because it determines the timing of VAT payable or refundable. And in terms of our VAT Act, we get two accounting bases. The first one, which is known as the invoice basis, is the default basis. In other words, all persons who register for VAT is going to be automatically registered on the invoice basis unless they apply for the payments basis, or if the value of their taxable supplies when they do voluntary registration is less than 50,000 Rand. So in all other cases, except for applying to be on the payments basis, or you register voluntarily but the value of your taxable supplies haven't yet exceeded 50,000, all other VAT registrations is going to take place on the accounting basis. The general rule in terms of the accounting basis is that VAT is accounted for. In other words, this is the timing rule. At the earlier of the date when the invoice is issued, and you'll see a bit later how important documentation, specifically tax invoices, is from a VAT perspective, or the date that the payment is received. So the earlier one of those is going to trigger the vendor to account for VAT, the earlier of invoice issued or payment received. The exception to this, excluding those exceptions that I mentioned over here when we spoke about the default basis, is fixed property. Now, when fixed property is supplied, in other words sold, VAT is accounted for even if the vendor is registered on the invoice basis. It is accounted for when payment is received or when payment is made. In other words, the moment that it's a fixed property transaction, we don't account for VAT for a vendor that's registered on the accounting basis at the earlier of date of invoice or date of any payment. Fixed property is always dealt with on the payments basis, which you'll see is the second accounting basis we'll be looking at, even if the vendor's accounting basis is the invoice basis. Now, like I said, the second accounting basis is known as the payments basis, and this one is not automatic. There is, of course, an exception. Isn't tax lovely? But for the payments basis, you must apply to the commissioner in writing, and very importantly, it's not just you apply and then they're going to allow you to register on the payments basis. You have to be on the list of allowed entities. Now, what is an exception to this? In other words, when don't you have to apply? When will you automatically be registered on the payments basis? If you voluntarily register for VAT and the value of your taxable supplies is less than 50,000. Now, remember I said the invoice basis, that's the default basis. Unless you are voluntarily registered for VAT and the value of your taxable supplies don't yet exceed 50,000 Rand, then you will automatically be registered on the payments basis, and then the moment that the value of your taxable supplies exceed 50,000, you're going to move over into the invoice basis. Now, the rule for when VAT is accounted for on the payments basis is that cash flow triggers VAT. In other words, when the actual payment is made or when the actual payment is received, that is when we'll account for VAT. So we're not, when we look at the invoice basis, working on the earlier of the date that the invoice is issued or the payment is received, irrespective of when the invoice is issued. On the payments basis, we only account for VAT when the cash flows. Of course, there's also an exception here. So even if our vendor is registered on the payments basis, so they have to account for VAT when payment is made or payment is received, if the consideration, now consideration is the amount including VAT. If the consideration in money is 100,000 Rand or more, excluding fixed property transactions, because remember, fixed property transactions we have to account for on the payments basis, we will account for VAT on the invoice basis. In other words, the earlier of the date of invoice or date of payment. So if you've got a vendor who is registered on the payments basis and they sell goods with a consideration, in other words, the amount including VAT of 200,000 Rand, we will not account for that transaction on the date that the payment is received. We will account for it at the earlier of the date of invoice or the date of payment. Those are the two accounting bases we have for VAT: invoice versus payment.